Oh, hi there. Good afternoon and welcome to HYCM's online trading workshop with myself, Giles Cochran, a currency analyst. I'm really looking forward to the hour that we have ahead. We're going to be taking you through 1 hour of live trading and helping you to know how to put all those jigsaw pieces together so you can begin to trade confidently for yourself. Just a quick reminder that this is not trading advice. Even though we'll be going through some outlining some different price charts and different trading kind of ideas, none of those are advice. They're simply educational ideas to help you learn how to trade for yourself. How do you break down the market? What kind of places should be looking to enter and exit your trade? So it's an educational workshop, and the whole idea of it is that when you attend this workshop, you're going to take the handout, which I'll explain to you in a moment if you haven't already attended one of these workshops before, and you'll be able to apply some of these market basic foundations for trading in your own trading situation. So that's the idea. You will see at the bottom, can you just let me know you can hear me okay? I always feel more relaxed when I know folks can hear me. Let's see who we got. Oh, hi Ali, Enas Nu, Samuel Van, Stanley, good to have you here. Yeah, hi Nadir, that's great. Thank you very much. You're obviously hearing me loud and clear. Um, During the course of the workshop, what we're going to be looking at was going to be looking at the handout, which you should see at the bottom of your page. So if you look on your webinar control panel, just on the bottom of that control panel rather, there's a workshop guide where it says 20th of November. That is a handout that we'll be going through, and when you click on it and open it, it should look like this. Okay, so if you haven't found it already, go to your handout section of the webinar, click on workshop guide for the 20th of November, and you will see the template for every time you approach the market. This is a template for you to use. I'm going to be working it through with you so you understand how to use it. And on top of that, we have an extra content during this workshop. We're going to be looking at identifying entry prices and reducing stop sizes, so you can find a place where you can enter the market, and you've also got your stop reduced, so you're risking as little as you can. That's the idea of that. So how do you find that correct place to enter? So make sure you keep eye on that handout. Keep it to one side. We'll be referring to it during the course of the workshop, and we'll be looking at the end of that this workshop the exact way of finding an ideal entry price, one that's appropriate and technically appropriate. That's really what I mean, and we'll come to that later on in the session, so I won't need to labor that now. One thing I will have to say, good news if you're listening live. So all you guys here who have joined us on the workshop, we will be offering a one-to-one coaching raffle. And what that means is, because you've attended this workshop, your name will be put forward into a raffle. And in that raffle, one person will be chosen to have 1 hour's coaching with myself, and that coaching will be involving looking at issues that you're struggling with, areas that you really want to work on, how are you struggling with your trades, maybe review some of the trades that you've taken. And we'll be doing a one-to-one session for one person. Each month will be drawn out of a hat and out of the raffle, and that person will get to spend 1 hour with myself, and I'll be going one-to-one with them on a live kind of a Skype or webinar session. We'll work out how we're going to do it. Okay, so that's just to let you know. So good news if you're attended, you are already in the raffle, so you've got a chance of winning for this month. Yeah, that's great. Okay, another thing I want to say is, on the panel there are questions and there's a chat. I would say if you have any questions, just pop them in the questions panel. The whole idea of this workshop is that it's two ways. So, for example, if you have a question or something I go over and you just want to go over it again, or you don't quite understand, please just put a question and I can try to explain it and help you understand. Because often, if you're struggling with something, there's probably someone else who's struggling with the same thing. So don't be afraid to use the question panel, and I will try to answer as many questions as I can during the session. So that's just to flag that up to you. The next thing is, if there's a topic you really want covered, maybe there's an aspect of the financial markets that you really don't understand, well, why don't you email suggestions to us here at workshop@hycm.com. There's the email there. Just send us an email. And when we look at that email, the team will be looking at the suggestions, things you'd like to cover. So just send in an email. It'd be great to see what you're struggling with, what you really want help with, and we can help you answer those in future workshops as well. Without further ado, I think the best thing now is to turn to your handout. So if you've just joined us, and a few extra people have been joining us while we've been on the line. So if you've just joined us, on the bottom of the GoToWebinar control panel, there is a handout. And the handout looks like this. If you just click on the handout, it will open up. Now that handout is for you to take and to use in your own trading on a day-to-day basis. Okay, so we're going to be looking at the first aspect of this handout. So you should have all opened it. And also, if you open your demo account now as well, so if you open up your trading platform, you've got that nice and ready. So when we go through, when we get to look at the charts section, you'll be completely ready for us as we do that. And I will also be doing an interactive workshop. So the idea of this workshop is that you do some work as well. It's not just me doing the talking. You guys are going to be doing some work as well. And the good news is, as you put your ideas across to me, I can help direct you and let you know if you're on the right way of thinking. Now, the first thing to really realize as we turn to our handout, the first section is looking back. Now, before you can look forward, you have to look back. And the first thing you do when you come to your trading desk, before you even open a chart, you want to look back to identify the recent sentiment by reading up on the last 2 sessions of market activity. Okay, this is the first thing you do. So as soon as you come to your desk, you want to find out what is the sentiment of the market. Now, sentiment can be understood in the way of you describe a person's mood. Okay, so a family member, you can tell whether your nearest and dearest family members, whether they're in a good mood or whether they're in a bad mood. You can tell just by looking at them. Why? Because you know them. And in a very similar way, the market has certain moods. So the mood of the market might be on a risk on, or it might be on a risk off mood. Certainly. Oh, hi, Diep. Good to see. Yeah, good to have you. Got some more people joining us. Guys, for those of you who are still coming in, we're looking at the handout at the bottom of the GoToWebinar panel. Just hook up the handout, click it, and you'll see it. We're here just looking back. I'm just starting us going. And remember to ask questions as you're going along. The idea of this is meant to be interactive, helping you guys. And I will be asking you some questions as well as we go along. So identify the recent sentiment. You've got to find the mood of the market. You can't just jump in and start trading. It doesn't make sense, because you have to know what is the influences, what are the pressures on the market, because there's certain things that the market responds to every single time. You need to know them and learn them, and it does take time. You can't just all of a sudden get this. You need to practice it. That's why I'm giving you this handout, because you go away, you practice it. And the first thing you do, look at the recent sentiment by reading up on the last 2 sessions of market activity. So today, because I'm a kind guy, I'm going to be helping you understand what the sentiment is of the last 2 sessions of market activity. So we are now approaching the start of the US session. Okay. Now, previously, we've had the London session this morning, and we had the Asian session before the London session. So the last two sessions of market activity are from the Asian session and the London session. Now, when we go back, that's what we're doing here. The first thing we want to look at is what happened with the Reserve Bank of Australia, because I will just go to the HYCM's calendar. And when you look at HYCM's calendar, which is just there, perfect, we shall see that a key event that happened last night was with the Australian dollar. And the Central Bank for Australia met last night. You can see that where are we here? We can see that let's just go to this week. Here we go. The Reserve Bank of Australia's meetings minutes. You can see it has 3 stars. Now, we were talking about this when we were looking at the week ahead. We wanted to see what was the Reserve Bank of Australia doing. They had been more confident recently. They'd had some really good economic data coming out. And so they were still on hold, but they were more confident. So last night, the Reserve Bank of Australia's meeting minutes were really quite important, okay? And the Reserve Bank of Australia, essentially, they kept their rates, interest rates on hold. They said, we pretty much think the same as we have done previously. So they're confident. They think the next rate hike is likely to be up. So they're expecting an increase in rate hikes. They had some concerns about housing. So some of the costs of housing was a bit of a concern. They also had some concerns about global growth. But aside from that, they were quite confident on the Australian economy. Now, there was no real change. Remember, what we're looking at, trying to identify sentiment, is we're looking for change. They didn't change at all. But last night, at the same time, just after the Reserve Bank of Australia kept their policy on hold, essentially, the IMF said some quite negative comments about Australia. They were saying that the Reserve Bank of Australia should keep rates low, that the economic expansion was expected to continue, but they expect to see gradual upward pressure on wages and price, but they had warns of risks from slower China growth and trade tensions. And they said, note that a sharp tightening of global financial conditions could spill over into domestic financial markets. In other words, the IMF's concern was that a slowdown in China growth, global growth, would result in more difficulty for the Australian consumer. Okay, so that's quite a negative tone. On top of that, the Chinese Ministry for Finance official Tan Long came out last night, and he said that economic uncertainties have increased. Economic uncertainties have increased. Oh yeah, Anas, this webinar is going to go on for an hour. So we started just about 15 minutes ago, and it goes on for a whole hour. Just to let you know, it's 1 o'clock GMT to 2 o'clock GMT. Now, for those of you who haven't known this, the Chinese economy is very closely linked to Australia's economy. About 30% of Australia's GDP is linked to their trade with China. So with the Chinese Finance Ministry saying that economic uncertainties have increased, that means that it won't be long with that kind of talk that the Chinese government reduces their projections for their GDP and growth for the year, for next year, okay? So those kind of comments are going to weigh on the Australian dollar. So we've had the Reserve Bank of Australia, who's on hold. They haven't really changed anything. They haven't said anything exceptionally good or exceptionally bad. It was as the market expected, okay? Then we had the IMF saying that there was some concerns about slower China growth and trade tensions, and concerns that the Australian consumer will be hit by a change in global financial conditions. So they should say that Reserve Bank of Australia should keep rates low. Okay, so that is going to be bearish on the Australian dollar. We had the Chinese finance minister, Tan Long. He was saying that economic uncertainties have increased. That is a much more bearish outlook for the Chinese economy because of the link to China and Australia. Australia's economy has about 30% GDP linked to Chinese trade. Consequently, you can see that this is starting to look quite bearish for the Australian dollar. Okay, you can see. And on top of this, we had some equity news. Now, this has been an important part of understanding what's been going on recently. So yesterday, US equities had a really big fall. Okay, so Nasdaq led the way down yesterday by dropping -3%. So that's a very large fall. The Dow closed down 1.5%, S&P 500 1.66%. So in the session previous to the Asian session overnight, we had these large falls in equity. Okay, now when one session has a drop in its equities, we're then looking to see, does that drop in equity translate into the next financial session? So this happened in the US session yesterday, and then we had the Asian session, and the Nikkei fell overnight -1.09%. Okay, so we had that fall overnight. So that means that the market is in a risk-off tone. Okay, when you're having concerns, when you're having the equities falling, concerns about global growth. Remember, the Federal Reserve said that they were concerned about a slowing global GDP as well. You can see the market has now entered into a risk-off mode. And here's a question for you. Okay, when the market is in a risk-off mode, what currencies typically get bought? What two major currencies get bought in a risk-off scenario? And I want you to answer me. So type your questions in, tell me. When the market is in a risk-off tone, which is what it's hovering around now in that risk-off tone, which currencies get bought? Okay, now the US dollar does get bought in a risk-off scenario, but there's two more, Nadir, that are that are better options for you in a risk-off market. There's two other options. Well done, Nadir. US dollar does get bought in a risk-off environment. That correlation has been changing recently. Less US dollar has been bought recently in a risk-off environment. But which are the two? The dollar does, but that's in the order. There's three currencies that get bought in a risk-off environment. And the dollar's probably the third in the line. Which are the top two? No, it's not the euro. It's not the pound. It's not the Australian dollar. I'm really glad I asked this question, because there's two currencies that are bought in a risk-off environment. And I'll give you a few more minutes. Let's have it, guys. Okay, yes, gold has been in a risk-off environment bought, but only in a certain type of risk-off environment. That was particularly in the financial crisis of 2008. But in a severe risk-off environment, gold will be bought. Okay. However, the answer that I'm looking for is the Japanese yen and the Swiss franc. Okay. Now, because of the way the debt is structured in Japan, literally in Japan, the debt of the nation is owned by its own inhabitants. So that means that the Japanese debt is seen as a very, very, very secure debt. And the Japanese economy is seen as extremely secure. So that means when there's a lot of concerns about where can I put my money, where is a safe place to invest, one of the key places is the Japanese yen. So whenever you have a risk-off environment, similar to what we're seeing here now, okay, look, you have equities falling. Anytime an equity falls above 1%, you should take notice, okay? So this is -3%, -1.56%, -1.66%. Okay, and the NASDAQ, this has been linked to technology. So technology equities have been really hit recently. That's what's been driving that. You know, you had some Apple has been really falling recently. If you just have a quick look at the Apple chart, let me just show you. Oh, this. Let's try again. There we go. Let's try this. Yeah, so here's the Apple chart. You can see that it's been falling very heavily. And the reason it's been falling very heavily was concern about demand for the iPhone. There's been concerns about some computer chip companies. And so the NASDAQ has been really hit hard. Okay. So in that environment, the Nikkei has followed suit from what happened to the US. That is down as well. So we're going to see Japanese yen being bought. We're going to see the Swiss franc being bought. So put this into your heads. Okay. When the market is in a risk-off environment, the Japanese yen and the Swiss franc will be bought. Okay. So you now know which currencies you can expect to be bought in a risk-off environment. Japanese yen, Swiss franc, and the US dollar. Although the US dollar recently, for reasons we won't go into now, it hasn't been as clear-cut. Okay, but Japanese yen, Swiss franc, that's very clear-cut. Okay, they are bought in a risk-off environment. Okay, so we're starting to get a little bit of the picture. Okay, things are starting to come together. Now, when we start to look at the dollar index as well, that now we've been following the dollar index, and the dollar index is like a compilation of all the US dollar positions. Okay, so if you look at the dollar index, we've been looking at this recently, and when we've been looking at it, we'd seen that it was up to this level here. It was a 97 level, was a key level for the dollar index. Price tried to break it through, fell down, and prices fall. The dollar index fell yesterday, and you can see prices trying to make a recovery now. So the dollar index is 96.37. So we've got some dollar weakness in the charts, and the question is now, will we see some dollar strength coming up? Now you have got a trend line. Technically, you can see a trend line from here, here, here. You can argue that's still just in that trend line, maybe slightly broken, but we're seeing some dollar weakness as well. Okay, so we're starting to see there's a little bit of dollar weakness. It's in the balance. This is the daily chart, so it's trying to make some recovery. We're seeing some yen strength because of the risk-off environment that we're heading into. Now, as we come into London, okay, coming into London. Session, just as we're closing the London session, we can have a look where the S&P 500 is. Now, the S&P 500 futures were 0.70%. Now, this is before the S&P 500 opens. So if you want to get a sense of what the S&P 500 chart is going to be, you look at the futures. Because when you look at the futures, you can see, how is the market positioning itself. So at the moment, the S&P 500 futures are down minus 1.12%. So since I started doing this webinar, I started pulling these information in maybe 2-3 hours ago, that the S&P 500 futures has fallen further. So that is now down to minus 1.12%. I can just see on my charts on my other screen. And the Dow futures are down minus 1.15%. Okay. And let's have a look at the NASDAQ futures as well. The NASDAQ. So they're all down. You've got the S&P 500 down. You've got the Dow down. The NASDAQ. So it's all down, and that is not going to be making for a very good environment. So it means we're now heading into the US session in that risk-off environment. Okay. Now in the London session, we've had Bank of England's Governor Mark Carney. He was basically saying that the Bank of England is on hold, and it's on hold because it doesn't know what's going to happen with Brexit. Okay, so you've got Bank of England, we've got pressure on the pound. Now you couldn't have missed this if you've been following the financial markets. It's all about Theresa May. It's all about her Brexit deal with the European Union, and Theresa May has to try to get her parliament to vote through the deal that she's arranged with the EU. The problem she has is that it doesn't look like she can get the deal through parliament. So the market knows that, and every situation, really, there's going to be lots of opportunities to sell the pound, particularly at the moment, because will there be a vote of no confidence against Theresa May? There's constant usherings that there will, and if there is, then there'll be a re-election with the Conservative Party, and Theresa May could be ousted, although the market projections are saying no, she will keep her position. But there's a lot of uncertainty around the pound. So the pound is being heavily sold at the moment, and the expectation is for more pound weakness. And the market is what's called trading on headlines. So, for example, I was covering this story last week for the company I'm working for, and I was constantly looking at headlines on Reuters about Brexit news. When Dominic Raab, he resigned unexpectedly. Jacob Rees-Mogg was threatening to put in a application of a vote of no confidence via the 1922 committee. And every time these kind of news came out on Reuters, the pound was being sold off. So the pound is in a vulnerable situation. It's vulnerable to being sold. It's vulnerable to be sold on headlines, which means it's very volatile. So that's something you have to be aware of when you're trading the pound. Other significant news was the Italy-German 10-year bond yields. Now, that increased that gap in the Italy-Germany 10-year yield spread, and it's rising up towards the 4 basis points mark. Now, we will cover bonds in some depth, because it's something that beginner traders really struggle with. So I'll probably, in fact, I'll do that next workshop. We'll look at bonds in detail, so you've got a better understanding of it. But for now, essentially, this has shown that the euro is being sold because of concerns over this Italian debt, and the fact that Italy is submitting a budget deficit to the EU, and the EU don't like it. Italy are being quite controversial in the way they're approaching the EU. So there's controversy about the Italian budget. This has meant that the cost of borrowing is being affected, and this has meant that the euro is being sold off. And the euro is being sold now for 2 reasons. You've got the Italian budget problem, and you've got the Brexit problem, because the Brexit problem is not only a UK problem, it's also an EU problem. So you put that together, both of those 2 factors are weighing on the euro. So when you start putting this together, okay, what we're going to look now we'll look at this now. We want to start looking now forward, okay? And before we look forward, the key thing to do is we've identified recent sentiment. Do you see? This is what you would do. You would have gone and you would have researched on your own, and you would have found out those things that I've been sharing with you, okay? And once you found them out, you then want to say, can you summarize that sentiment in a sentence or 2? Okay, so have a go with it now in the comments. Have a go at trying to, and remember, sentiment just means mood. What kind of mood is the market in? Okay, what kind of mood is the market in? Have a go, and have a go at telling me if you're struggling with summarizing the sentiment as a whole. Try and focus on just one aspect of it. What jumped out at you? Was it maybe something to do with the euro? Was it Brexit and Italian budget concerns? Or maybe it was something to do with the Bank of England? Or maybe it was to do with a risk-off environment? Why don't you have a go at typing what sentiment would you say is affecting the market at the moment? Because you have to remember, the market is like a mood. It's like a person. And before you approach anyone, you need to know what mood they're in. If you're at work and you wanted to approach your boss, you wouldn't approach him in a bad mood. You wait till he's in a good mood. In the same way, if you wanted to speak to your husband or your wife or someone you love, you know there's a right time to speak to them and there's a wrong time to speak to them. You carefully gauge their mood. Same with the market, same with trading. What is the mood? Have a go, guys. Have a go in the questions. See if you can just start typing and giving me some feedback on what you think the mood at the present mood of the market is. Have a go. Nothing's coming through yet. I'm waiting. Who's going to be the first one? Who's going to be the brave person to submit to the questions what they think the sentiment of the market is? Oh, well done. Okay, euro and pound falling. Nadir, excellent. Well done. Very good. That's Exactly right. So you can see now, Nadir, and you've identified that the current market sentiment is pound weakness and euro weakness. Okay, Nadir, you get 2 gold stars. Now, CAD, Tribhuvan, why did you say CAD? Why do you think CAD is particularly either? Why did you mention CAD, Tribhuvan? It'd be nice to hear why you're thinking the Canadian dollar. We haven't actually mentioned the Canadian dollar. Nadir, excellent. Pound weakness, euro weakness. Can anyone tell me what currency are we expecting to see strong? What currency are we expecting to see some strength in? Having looked at that sentiment, and I'll give you a clue. We saw that equities were falling in the US. We saw that equities fell in the Nikkei. We saw that S&P 500 futures were down. So you can see here S&P 500 futures here is down 1.18%. See the DAX is down 1.25%. That's the German. See the FTSE's down 100. Okay. So we're looking at all, and oil's down as well, 1.42%. So you put that all together, yay! Well, guys, brilliant. Samuel, Anas, Nadir, very good. Dieppe, I like your perspective as well. So Dieppe says not to touch the pound, and well done, Dieppe, because you're probably recognizing that the pound is very volatile. And because it's very volatile, you've decided to step aside while that volatility is carrying on. Dieppe, so I like your thinking there. Nadir, Anas, the Japanese yen, indeed, we should expect some Japanese strength because the market is in a risk-off environment. The Swiss franc, Anas and Samuel, yeah, Swiss franc and Japanese yen. So, right, I have to say, well done, everybody, because what we're gonna come to this in a minute, but we've recognised, haven't we, from the sentiment we've seen, we're looking at pound weakness, euro weakness, we're looking at Japanese yen strength, we're looking at Swiss franc strength, and we're just going to put the US dollar, we're going to put it in the balance at the moment because the dollar index is trying to make some gains today, but we don't know exactly where that's going to go. So excellent. I'm very impressed with you guys. Thank you for those for answering, and I'm pleased to say that you've got the right answers. So the next fella to go look at is to look forward. Now, looking forward is as important as looking back. Now, the reason this is because you might understand the present sentiment. You might start recognizing good places to trade, but then something might go wrong, because what you might do is you might forget that, you know, in an hour's time, there's some really key market moving data that's about to come out. Because what happens when there's a real key event, and this could be something like a GDP release or an inflation release, or it could be some banks minutes that are about to be released. What tends to happen is the market tends to go into a very retracted mode. There's not very much movement and everything's a little bit jumpy, and there's very small ranges. So if you're entering a market into the market before a key data release, nothing much will happen, and then all of a sudden when the data release occurs, there'll be a lot of volatility, which might end up in you either being shot into profit or shot out of your position. Either way, it's not something you want to do unaware. Okay, there are correct times to enter before key market events, and maybe we'll get some opportunities to cover those in future workshops. But for now, when you're making a trade, you never want to enter before a key market release. So let's go to our calendar and let's have a look what we have. So that's our workshop guide. For those of you who just joined us, make sure you have that downloaded and open. We'll look at our HYCM economic calendar. We've covered the Reserve Bank of Australia's release that happened, and now we have housing starts, building permits, and then coming out we've got so at 155 GMT we've got the red book index. That's not market moving data. We've got consumer confidence index as well, again not market moving. The German President Weidmann speech might be worth looking at, but not typically moving at all. Let's have a look. What else we got? The weekly crude oil stock, that's coming up tonight. Now that can be market moving, but that's coming up at 9:30. That's the private inventory data for oil. And we have a Bank of Canada Council member Lane's speech. So you put that all together, and we haven't got anything particularly market moving coming out in terms of data. And that doesn't mean there can't be some market moving information that comes, either a speech or some event, but we know that there's nothing planned in terms of planned economic data releases. Okay, there's nothing there. So let's go back to our handout, and we can see when we're looking at our handout here, where are we? So we've identified the sentiment. We've looked for key upcoming market events. Is there an anticipation? No, there isn't. So now we turn to look at the charts. Okay, so we've had to do all that work before we even look at the charts. Okay, and now we're looking at the charts with a much more confident bias. Okay, so now this is where we're going to get specific. Because you might think sometimes, well, do we just open up the charts and look at all the charts and look for lots of different technical places to enter? No, we don't. Instead, we develop a bias for certain currencies based on our sentiment analysis. So we may only be looking at one, possibly two currencies to trade. That's the way we do it. That's the way many professional traders trade and approach their market on an intraday trading bias, and this is the method that I personally use. So now we want to look at a bias. So can you tell me what currencies, based on our sentiment analysis, might we be looking at trading today? Okay, what currencies might we be looking at trading today? This is the bit, guys, where you do your work, don't forget. So we've discussed some currencies that we expect to be weak. We've now discussed some currencies that we expect to be strong. So which currency pairs will we be looking at trading? And I want you to put it in the questions. Tell me which currency pair and whether you're buying it or selling it. Okay? So pop it down in the questions. Let's hear from you guys. What currency pairs, based on the sentiment analysis we've done, will we be look at trading? Right, okay. So we have euro, US dollar. And would you be selling or looking to buy the euro, US dollar? Okay, Anas, you'd be looking to buy. Now, I think the euro at the moment is definitely a sell. If you remember the information we've looked at those widening yields, we've looked at the Italian budget problem, we've looked at the Brexit problem. The euro is a sell at the moment. I wouldn't have that as a buy. And the US dollar, Japanese yen, we're seeing some yen strength. So if there's anything, I think US dollar, Japanese yen would be a sell as well, because we're expecting Japanese yen strength. So I would have to disagree with that, and as not a very good intraday trade based on our sentiment. Yeah, no, I wouldn't be looking to buy euro, US dollar. Okay, we've had that negative sentiment out on the euro this morning. So there's going to be pressure on the euro coming into the intraday charts. Okay. Okay, US dollar, Canadian dollar, sell. We are seeing some. Well, Tribavan, I'd have to disagree with that, because we are seeing, if you look on the oil charts, if you look at the price of oil, I'll just pull up the oil. We can see that oil's down 1.75%. And with oil being down 1.75%, that means that the Canadian dollar is going to be sold. Okay, so that's US dollar, Canadian dollar strength. Okay, yeah. Yeah. Okay, analyst. I'm not doubting there won't be really good support and resistance levels. But the way to really trade successfully is you don't just look at technical pairs technically. You want to look at them from a sentiment and a technical basis together. And it's when you marry those two together that you get the best trades. Swiss franc, Japanese yen, not necessarily, Samuel. If you could just explain your reasoning for that. Okay, we've got euro weakness and Japanese yen strength. So what about euro yen? Okay, because if we're expecting to have euro weakness and we're expecting to see Japanese yen strength, we should expect to see that the euro yen pair, we should expect to see that selling off. Okay, we may also want to look at the pound yen because we can see that the pound is being sold off on bearish sentiment regarding Brexit for Britain, and the Japanese yen is being bought on risk off sentiment. So we might expect to see some pound yen weakness. Okay. I think euro US dollar may be worth looking at for a sell, as well as pound US dollar might be worth looking at for a sell given the Brexit bias. Okay. And I know some of you know that I was selling the pound US dollar yesterday against the 100 exponential moving average. So let's now go to the chart. Okay, Truban, you thought that? Yes. Okay. Let me just see what you US dollar. Yeah, Truban, there is some merit to your idea with the dollar getting weaker, but I think the dollar's in a balance at the moment, so that's one to have a look at because the dollar index is making some gains. The last time we looked at it about 15 minutes ago, and also the key thing whenever you're trading US dollar, Canadian dollar, you've got to factor in oil when you're trading the Canadian dollar. Okay. And because oil is falling, that's going to be pressure on the Canadian dollar because the Canadian dollar has the US dollar Canadian dollar pair has a 90%, 96% correlation with the oil charts. Okay. So in other words, what if oil is going up, Canadian dollar is going up. If oil is going down, Canadian dollar is going down. And because the oil market is down 1 point, let's have a look. What is it down at the moment? Because the Canadian dollar is now down 1.78%, that means we're going to see the Canadian dollar being sold. So if we looked at the US dollar Canadian dollar chart, what we'd expect to see is we expect to see US dollar appreciating against the CAD. So let's just have a quick look at the chart, see if we've got it here. See, and that's exactly what we see. See, I didn't know that, Chibivan. Okay. The only reason I knew that is because of the correlations. I hadn't looked at the charts at all until I've just flicked it up now. And what you expect to see is US dollar, Canadian dollar strength. So you could argue that that's not a bad buying situation because of the weakness in the oil market. See that CL reading there, that is US crude oil. So it's 56.18, 1.78%. Yeah. Yeah, when I say oil, I'm referring to CL. That's US crude. Okay, and you can see, look, the US dollar Canadian is really increasing now, and that's going to be the oil. True, man. That's good. Now I'm glad you've got that. And you whenever you're trading the Canadian dollar, look at the oil charts. Okay, you must. Because if you get into a US dollar Canadian dollar trade and you don't know what oil is doing, you're going to be surprised. Like if you, yeah, good. Okay, good. I'm glad you got that, guys. That is super. So we're looking at the next part, which is we're now looking at pairing up the weak and strong currencies. Okay, so we're going to look at one of these. We're going to look at the euro yen because this we're recognizing as a really good pair. So look, you see US dollars just it's that falling oil which is doing it. So let's look at the euro yen. So we're expecting euro strength and euro weakness and Japanese strength. So look, as soon as we come to the daily chart, look, what do we see? We see a heavy selling off. Okay, this is what we'd expect to see. See, price is selling off heavily on the 4-hour chart. Now we're starting to look for technical places to enter. Okay, guys. So now we've got our currency pair that we want to try and trade. Here it is. It's the euro yen. We're selling off heavily. Now here we are. Okay, looking at this chart, we're looking for technical places to enter. Now, if we come to the chart earlier and chart was here and we knew what was going on, we could have entered around this area here with our stop above the 100 exponential moving average, but we've missed it. Here we are. So now we've got the 1 hour chart. You can see that price broke down heavily. That was on that bearish sentiment that was coming out of the euro. And we saw price retraced up to the 100, 200, and 50 exponential moving average, tested it and sold off heavily. That would be in a very good place to sold. So you could have sold after the touch of the 100 EMA, put your stop above the high, move to the downside. That boat has gone. That's not for us now. So we're looking now at the 15-minute chart, okay? And as we go down to the 15-minute chart, we want to look for key places to enter. So we can draw a trend line from here to here, okay? So with the trend line touched once, touched twice, we can see that another touch of that trend line would be a potential entrance to go short. We can see a return to the exponential moving average, the 50 exponential moving average. Any return to that area would be a good place to get short. So this is now when you want to focus in and look in at the chart, okay? You know what your bias is. We also want to look for other key technical places to enter. So as we look for other key technical places, we'll look for some pivot points. So we'll go to the chart here. I'm going to look at just going to look at some different opportunities. Euro yen. Just going to pull out some pivot points for us, okay? And the pivot points show us good places to enter as well on this chart. So, okay, we've got a pivot point here at 128.93. Let's go down to the 15-minute chart as well. Let's see if we've got them. Okay, so where we have a good pivot point here, 128.55. Okay, now that is a support one, but that will likely turn into a resistance pivot point. So 128.55. Okay, so we can see a pivot point. That's a very sensible place to enter. So now we'll go back to our chart. When we go back to our chart, we see 128.55. So 128.55. Okay, so a sensible place to enter this trade, if we wanted to try to follow this trade, we would put in a pending order. We would do a sell at limit. We put at 128.55, and we could put a tight stop loss in just above the collection of exponential moving averages of 128.75, and we can put a take profit in of 128.30. So that would be a sensible place to enter. You could probably pull that down just a fraction, and then if price retraces back up to this sell limit, we'd expect there to be selling in place. Okay, so that is how you'd start to put some of that together. Okay, if you didn't want to do it like that, say for example you wanted just to set an alert. What you can do, you can set an alert at 128.55 and see how price reacts at that level. Okay, so returning to our handouts, you can see here that we've looked at the charts, we've paired up weak and strong currencies, we've written them down, we've looked for key technical places to enter, and just let's go back to the chart. Say other key technical places to enter. Just tell me, looking at that 15-minute chart, yeah, where would be a good place, do you think, to enter a euro yen short? Okay, looking at the 15-minute chart, where other places would be good to enter? So I've shown you one technical place. Okay, let's draw a Fibonacci retracement on as well. Okay, where would be another really good place to enter? Okay, there's a Fibonacci retracement drawn on the chart. We always go from left to right with the Fibonacci retracement. Between 50% and 61%? Yeah. Yes, Anas, perfect. That's the area that jumped out to me. Now, the reason that area jumped out to me was for a number of reasons. So Anas has just said, look, another good place to enter would be here. Okay. So it's between the 50 and 61.8%. These are, key retracement levels. Now, what you want to find places where lots of technical areas line up together. Okay. So knowing that the market is selling off, and you see it's selling off really quite heavily, an ideal place to enter would be here because it's a collection of 100, 250 exponential moving average. Yeah. You also have the horizontal, excuse me, sorry, you also have a horizontal support just coming through here, 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 there. And you have the 50 to 61.8% retracement level. So if you wanted to move this up higher, so you could say, well, do you know what? I really want to go for a real optimum entry, okay? And you could tighten your risk here because of those collection of exponential moving averages are likely to provide some pretty decent resistance, okay? So you could then look at trading like that, and then you could take profit down at the 23.6% Fibonacci retracement level. That would be completely legitimate. Excellent. So 128.70, Nadir. Let's see, 128, yeah, Nadir, that's it, 128.70. So there's a couple of places which I would see are worth looking at. So 128.55, because you have a pivot point, and then 128.70 is an excellent place. Okay, so they are two good places. Right now, guys, what you've done now is quite significant because could you just say, is this a different way than the way you've been approaching the markets? Does this seem a more comprehensive way of trading the markets because you're putting that sentiment picture together? You're understanding why the currencies are behaving the way they are doing. Okay, you're then and only then are you identifying the technical areas. And as you can see, guys, you were spot on technically. They were very sensible places to enter the market. So when you start putting that all together, you'll find that things will start making sense for you. Okay. Now, as I said, this is educational. So I'm not even saying, this is not advice saying you should trade the euro yen pair today. Okay. Because what you have to do, you have to be selective. You have to trade the best trades that have the best fundamental and the best sentiment reasons. Over trading is an easy problem to fall into, okay? But this has been an education process. And take this handout away with you, okay? Okay, and as I'm just going to answer Anna's question, my issue was identifying the correlation between currencies and stocks and commodities. Is there any simple guide on the correlations you mentioned? Anas, yes. Now that takes time, Anas, and it's through attending this workshop and through doing your own research where you will be able to iron out those issues. It does take time to see the correlation, between oil and the Canadian dollar. How does China's economy affect the Australian dollar? What impact does the Nikkei have on the Japanese yen? How does risk on, risk off sentiment? That takes time. But if you maintain reading, if you just keep reading market analysis, Anas, it becomes clear over time. And then write your own crib sheets, do your own. You have to do your own research. Ali, yeah, no problem. Nice to have had you here with us, Ali. Thank you very much. Yeah, okay. So Anas, just persevere with it and write it down. So write down the things that you've got from me today. and that's your start, okay? And you start seeing that. But generally, when you see the equities down more than -1%, your alarm bells want to ring, and you think, is this a risk-off environment? It might well be. Then read up and get some other, read analysts. My job as a currency analyst, read people like myself, and you'll quickly get to grips with it. Yeah. Okay, Anas, you'll have to speak to support about that question. Okay, that's great. Okay, very, very good. Now that means we have time to look quickly at that special topic I mentioned to you, and that special topic was how to limit the size of your stop, basically. So how do you decide what size of stop for you to use? Okay, so basically what you want to do when you're deciding on the size of your stop, you want to use about 25 to 50% of the daily average range. Okay, so let's have a look. If you insert here indicator, you have got the average true range. Okay, that tells you the average true range of the last 14 periods. Okay, so looking at the euro yen pair, we're looking at the average true range indicator, and look, you can see here the average daily range has been 83. Okay, so as a general rule, you know that 83 is the average true range. Well, then you're going to be wanting to look at having a stop of around 50% to 25% of that. So 50% of 83 is roughly 41. Okay, it's not exactly, I know, but it's roughly 41, and 25% would be about 20. Okay, so you want to stop of between 20 and 40 points in this on the euro yen. And look, the stop that we've got is we've got a stop of 128.77, and we've got it. We've got a price 128.63. So we've got a bit of a tighter stop even than that. Okay, so there is a very tight stop, and if we wanted to, we could just raise that up. Look, make it 20 points. Okay, there, that's perfectly acceptable there. Now you then want to look at how can you reduce that stop. So in our situation, we looked at reducing that stop because we said to ourselves, look, this is such a cluster of support, of resistance rather. This is such a cluster. You've got all three moving averages. You've got that horizontal line. You've got the 61.8% Fibonacci level. So we were thinking, do you know what? Look, I could just pull my stop in much tighter. Okay, because if price goes above there, and we have to allow for the spread, so just a bit higher, just a touch higher, you have to allow for the spread. But then, you know, that is how you reduce your stop. Look at key places, because if price does go up through here, then, you know, you're thinking that something's gone wrong. Maybe there's been a sudden change in the market. Then you want to get out as quick as you can. And then once a price has moved, you always want to look at a good place to exit. So say later on during the session, price moves up to here and it starts, where's a good place to exit? Don't hold on to your, especially your intraday trades. Don't just keep holding on and on and on. You'll be tempted to. You'll be tempted to think, oh, I'm in profit. I want to keep holding. I want to keep holding. No, look, just take the profit when it presents itself to you. So you want to take somewhere between 40 to 60% of the average true range. So you want to be taking somewhere between, you know, 40 and 60 points. So a good technical place here was just the return to that 23.16 level. Okay, so just return to there would be a sensible place to take profit. You can see, look, we risked 123 euros. And we're trying to gain 195 euros. So we've got a more than one-to-one risk reward. The whole thing makes sense. And then when it comes to closing these orders, we want to close these orders before close of the market tonight. Okay, so 21.59, we want to close that market. We're going to close that order. So we can just leave that, and we can just wait to see what happens with the trade there. So getting an entry is very important. Use 25 to 50% of the average true range. Here's the average true range here. Okay, that's the average true range, and it was 83. use that kind of stop. And then once you've put your stop in place, look, how can I reduce that? We're able to reduce that stop further due to the collection of those moving averages. I'll show you an example of a trade I took yesterday. And a trade I took yesterday was here. It was price was moving up against the 100 exponential moving average. I wanted to sell the pound because of Brexit concerns. I sold around here. I had my stop just above the highs, and price moved down there. And so I was able to use a very tight stop because technically I could see the resistance of the 100 exponential moving average, entered there, price above the high, and price sold down. Obviously, they're not all going to work out. Of course, they're not. But this is a good place, and you can see that price is finding resistance here and here against the 100 exponential moving average on the pound chart. And we've already acknowledged, haven't we, that there's weakness in the pound. So that's why I was looking to sell that. And the weakness in the pound was overriding some of the weakness in the dollar in my mind there. So that's why I was prepared to risk a pound US dollar, a short trade. Okay, so there we go. Guys, that is the end of our session. We're here, same time, same place next week, 1 p.m. every Tuesday, live market intraday analysis, where you can practice your online trading skills. Now, I have to say, guys, I want you now to go away and do your homework. Take this handout, the handout that's been given to you, and use it in your trading, okay? Come on. Use it, and then come back next week, and maybe you can start to tell me some problems you had. Maybe you can say, well, I tried it last week and this is what I found. Or don't beat yourself up if you get the analysis wrong at first. It does take time to get the analysis, but we have lots of resources available to us now, so we can find out this information and pop the trades in. Yeah, great. Guys, that is the end of leveling up with HYCM. I hope you feel like you've leveled up. Samuel, you're very, very welcome. I'm glad you found that helpful. Chiravan, good. I'm glad you found that helpful too. I really enjoyed it. And thanks to you guys for putting questions on the question panel. I know it's sometimes hard putting yourself out there. You think, because you don't want to get the wrong answer or you don't want to seem silly, but you guys did a really good job, and well done for answering. And I was impressed with how you did. So keep it up. Do the homework, guys. Samuel, Tribhuvan, Nadir, do your homework. Come back next week and let me know how you're getting on. And the rest of you guys, thank you so much for coming. Joanne, Locke, Nadir, Nu, Zach, Samuel, and all the others, Diep and Hon, thank you very much. I hope you have a really good week. Thank you for leveling up with HYCM. Don't forget, next Monday at 12:30 GMT, I do an FX week ahead. So that's looking ahead, looking at some of the fundamental analysis that's coming to the market. And that will supplement this session really well as the Tuesday session that happens every Tuesday at 1 p.m. GMT. Okay, guys, have a good time. Speak soon. Have a great week. Bye for now.